The Atma network uses this webinar series as a platform through which subject matter experts help you and your organizations with best practices so you can manage your NGOs more effectively and impactfully. If your organization is working in the space of education and is looking to accelerate its growth, then apply to the Atma Accelerator program. Visit www.atmaorg.in and click Apply to be a partner. Here is a short video for you to understand Atma education better.
Schools are important, that's no secret. And education is a necessity and a human right. It's also a luxury for most. In India, around 40% of children aged under 15 years live below the poverty line. The chance that these children will go to school are slim. This is Tara. If she doesn't learn how to read and write, she will probably remain in poverty for the rest of her life. This is an education NGO. They will try to give Tara an education, but they lack the resources required to scale and grow their organization, which means that Tara will lack the skills to grab the opportunities for a better life. The situation for Tara and her friends is dire. But there is hope. Atma is an NGO that focuses on creating scalable, sustainable, efficient, and effective education NGOs, helping them reach not just Tara, but her friends as well. Atma works with NGOs like this one, helping them expand and be more effective, transforming them into high-impact organizations. This means that more of Tara's friends will have access to an education that helps them build a better future, one that is free from illiteracy and poverty, for them and their children. Help Atma work with these NGOs so that they can help those in need better. We need your help. They need our help.
Today's topic looks into the topic of corpus funds and how to manage it. As a participant, this webinar will help you understand the different types of corpus donation, the various modes of acceptance of the corpus donations, how to use and apply corpus in your organization, the various accounting measures for the corpus funds, the tax implications on it, and some practical aspects and examples of managing these funds. Today's speaker is Ravi Bagaria. Ravi is the founder and CEO of Arya CFO Services and has over 8 years of experience specializing in finance, accounts, and taxation of NGOs in India. He works primarily with non-profit, non-governmental organizations as well as social enterprises. Arya's clientele includes Tata Trusts and other allied trusts, foundations to educate girls, Cuddles Foundation, Arpan, Vera Solutions, to name a few. Ravi's areas of expertise include strategic planning, budgeting, forecasting, MIS, and internal control setup, FCRA, and income tax. In addition, he presents at professional organizations and conferences locally. Before founding Arya in 2011, Ravi was the finance manager at AmeriCare's India Foundation. But before we head on to the session, let's recap a few basic rules. All attendees will be on the listen-only mode throughout the webinar. Any questions you may have will be taken up in our Q&A section towards the end of the webinar. So please type your questions in the chat box that you see on your screen and do keep the questions coming. A topic like this will be better understood if you raise specific challenges that you or your organization is facing pertaining to this topic. And last but not the least, after the webinar, we will mail all attendees the presentation that you will see today and any other additional resources relevant to the topic. To start off the webinar, I request you to take the poll that you see on your screens. You have 1 minute to select your responses. Thank you for taking that poll. Well, that's it from me. Over to you, Ravi.
Thanks, Vanita, for introducing me. Um, I hope all of you are ready for this session. I'm going to begin by just talking a little bit about why we took the poll. It will just help me understand the audience a little better, and how sort of I need to direct this webinar in terms of addressing you in terms of how familiar you are with the corpus, and are you raising this more often, or is it something you really need more understanding to sort of raise this? As I see, a lot of you, 40% of you have actually always, 50, more than 50% of you have sort of already got corpus funds in your organization. And of those, more than 1/4 of you are sort of getting corpus donations regularly throughout the financial year, which is good, which is a very good indication. So let's move ahead to the presentation and what does corpus actually mean. All right. So today I'm going to be covering, apart from what Vanita discussed, a few more topics on sort of what are the conditions that are required to sort of become a donation to become a corpus, the various modes in which you accept corpus, how can you use, if at all, you can use the corpus donations, the accounting bit of it, what are the benefits and consequences of receiving corpuses. some do's and don'ts, and practical aspects. Let's begin. Before we sort of get into the topic, let's actually first understand what corpus is and what is the definition of corpus and what does the act really say. So the Income Tax Act, section 11(1)(d), provides for exemption of the corpus donations to be from being a part of the income of the organization. I'll just read the section. It may be a little technical, but nonetheless, just bear with me. The following income shall not be included in the total income of the previous year of the person in receipt of the income. Income in the form of voluntary contributions made with a specific direction that they shall form part of the corpus of the trust or institution. We will get into this definition or what the act really says a little later. But first, let's understand the meaning of the word corpus. Surprisingly, the word corpus has not been defined anywhere in the Income Tax Act. So we look at, let's say, something like an Oxford or a Webster dictionary. They have been defined as corpus means capital sum originally lent or invested, or it also means the principal of a fund or estate which is distinct from the income or interest. So, what these definitions tell us is that corpus is usually a capital fund of an organization. It is not regular donations or interest or anything else that you receive. When you receive corpus, it is not revenue in nature, it has to be capital in nature, which means that when you account for it, it usually goes like how you have share capital and equity shares. When you have some share capital and equity shares, it then goes into um, the balance sheet as a liability item. All right. So let's look at some conditions with relation to the Income Tax Act, which are required to fulfill a donation to become a corpus. All these conditions are necessary to be fulfilled, without which a donation otherwise does not qualify. Does not qualify as a corpus donation. So the first one being that a charitable institution fulfills the conditions maintained in Section 12A, which is it has to have a registration under the Income Tax Act under Section 12. The charitable trust receives income which is in the form of a voluntary contribution. All these three have to be sort of in line. It has to be income, it has to be contribution, and it has to be voluntary. The contribution so received has to be received with a specific direction that it will be forming a part of corpus, which means that there cannot be it cannot be a revocable transfer. Like nobody can sort of give you the money saying if you don't fulfill XYZ conditions, I will take the money back. That kind of an income can never be corpus income. A corpus income is always given to the organization, and there are no rights that remain with the donor to sort of take it back. The contribution which is received cannot be anonymous, and it has to sort of be, you have to know who the person giving the money is and have details of that person. So over here, let's define what voluntary contribution actually means, right? So voluntary contribution means something which is given out of free will and is not legally enforceable by law, or is not mandatory for a person to make such contribution. It is not in the nature of any price which is paid for any benefit that accrues. So it cannot be for exchange of service, or like there's no quid pro quo between the party. Let's move on to the next slide. Yeah. So continuing to the conditions, and what happens if these conditions get fulfilled. If all those conditions that we just saw get fulfilled, then the donation qualifies as a corpus donation. And what that actually means is that it will be excluded from the total income of the organization, which means you do not have to spend 85% of that within that financial year, or sort of even accumulate that towards spending in the future periods. Just as a small example here, you can see there's a table here I prepared. The total donations received by an organization, let's say, is rupees 1 lakhs, of which corpus donations are 20,000. So the total income computed for the organization is 1 lakh minus 20,000. That means 80,000 is the only amount that you have to actually utilize as per the Income Tax Act towards um, and claim as application of income. So at least 68,000 has to be spent, and the remaining 50% may be allowed, up to 15% may be allowed for accumulation. Uh, yeah, let's move on to the next slide. Now that we've understood sort of what corpus is and what qualifies as a corpus, let's understand if there are any different types of corpus donations. And I'm sure most of you, or a lot of you, will have questions around this. One thing is, corpus donation can be of three kinds. One is restricted, second is unrestricted, and the third is like a self-created corpus. Now, as the definition goes, if we can just go back to the first slide. So, yeah, so if you see over here, when we say corpus, it has to come with a specific direction. And when we say self-created, obviously that means it is not going to be part of, just 1 second. Yeah, sorry. So I'm just going to restart this. When we talk about types of corpuses, there are three kinds of corpuses. One is restricted, unrestricted, and self-created. By the definition that we saw earlier, corpus donations only qualify when they come with a specific direction that they are towards corpus. So the first two kinds that are there, restricted and unrestricted, are the ones which are actually allowable under the income tax, where you do not have to offer them to tax. The third category, self-created one, is the one which you create out of the accumulation that you are allowed of the 15%. Let's look at these a little more in detail. Restricted corpus means when the money comes with a specific direction, not towards just corpus, but towards a specific purpose. And that specific purpose has to be towards capital expenditure, could be towards buying a piece of land, or building some fixed asset, or a building, etc. These are also allowed to be accumulated till you actually fulfill the specific criteria for which they have been created. Unrestricted corpus means corpus which has come with a specific direction to just be a part of the corpus fund, but there is no other direction attached to it. In such cases, the purpose is to sort of just remain as a capital fund and help the organization accrue more income, and sort of help the organization sustain in the times of needs. Self-created corpus, like I said earlier, is sort of internally decided by the organization to when they want to keep aside as an emergency fund, or sort of for a rainy day fund rather. These are not donations which come with specific direction, but from your donations, you as an organization decide to keep some money aside. So if you see next to it, we have the tax implications of each of these. The first two are not taxable, right? But the third one, which is self-created, has to be offered a tax, and then a claim has to be made for accumulation of these. Uh, Right. So the modes of acceptance of corpus. Corpus donations can be accepted through cash, through banking channels, as well as in kind. Again, when you are talking about getting cash donations as corpus, restrictions applies, as they apply to any other donation which is received, where that you cannot issue an ATG receipt over rupees 2000 for the cash that is taken towards corpus. There is no restriction on acceptance of cash donation for a charitable institution, except as under section 269 ST, where it does not allow an organization to receive a sum of over rupees 2 lakhs from a person in a single day. The other restriction also is that cash donations which come in cannot be anonymous. If they are anonymous, they do not form part of corpus. Through a banking channel, there are no restrictions. You can accept checks, online payments, DDs, or whichever other way. In-kind donations could be in the form of capital assets which are transferred to the organization. Let's say a building or a piece of land. Things which are immovable rather in nature and not movable. Now that we've covered the modes, let's look at how one can actually use these funds or the corpus, if at all, for the benefit of the organization. So, depending on the type of corpus that you have received, the application may vary. So, when it comes to restricted corpus funds, you can strictly and only use it for the purpose that you have received it for. Which is, let's say you received it for a building, then you can only use it towards sort of constructing that building or anything related to that building. Let's say the amount of money that you want to accumulate to create a building is say 2 crores, but right now you only have 50 lakhs out of that. What do you do in that case? And it's going to take you some time, let's say maybe two more years to be able to accumulate that 2 crores. In that case, the law allows you to sort of invest that money as per the provisions of section 11.5, which could be deposits in the bank as fixed deposits or post office savings or anything else that is mentioned under 11.5. One has to keep in mind that if corpus donation of such kinds is received through an FCRA organization, which is counted as foreign source, then the limits of where you can invest will be governed as per the FCRA Act. In that case, some of the investments which are allowed under 11.5 are not permitted by FCRA. That has to be kept in mind. If we talk about unrestricted and self-created corpus funds, they can be used only in very, very few and specific cases. For unrestricted corpus funds can only be used for, again, purchasing capital assets which are immovable in nature and not any capital assets. Again, they can be set aside and invested as per section 11.5. The other important thing to understand is that a lot of times organizations reach a stage where they do not have any other funds or reserves left. What they have to do is sort of pass a resolution to be able to dip into the corpus funds to be able to use it only for running the admin expenses or expenses which are necessary towards the sustenance or the survival of the organization. Remember, no part of the corpus can be used towards completing the objects of the trust or towards program expenses. If that happens, it may be treated as a breach of trust, and the organization may have to pay tax on the corpus that has been received. Let's move on to the next slide. Yeah. So again, like we discussed this, when there is no income, what does a charitable trust do? It is important to understand that in such cases, you cannot claim the income which is being used from the corpus. You cannot claim it as an application of income. Uh, you can only sort of use this uh, to sort of sustain and for the survival of the organization. One thing that I would like to mention here is that when you decide to dip into these funds, you should definitely document this as a board resolution. Sort of having all the trustees agreed to sort of dipping into this for just being able to survive, and because there is no other source of funds available. Now that we've understood how to use what the different modes and types are, let's look at how you account for corpus. So one of the things which is very important and we should all understand is that corpus donation should never be credited to the income and expenditure account. Because they are always in the nature of capital receipts, the entry that you will pass for it is bank account debit to the corpus fund. And this corpus fund will be shown under liability side of the balance sheet, just like how you have any other share capital or any other capital fund that is created. It's going to be independent of your reserves. It's going to be a separate line item which has to be shown on the face of the balance sheet. Any additions to that have to be shown again on the face of the balance sheet, uh, and so on. Tax implications of corpus fund. When you receive a corpus fund, like we discussed earlier, there has to be adequate disclosures, from the donor, which then allow you to make those disclosures in the income tax return. And hence they do not have to be taxed or offered to tax, or even show that you have to use 85% of those. Any income that you generate from the corpus, which would be when you have invested these into fixed deposits, any income that you get out of that will be sort of treated as regular income from the organization. In those cases, that interest and everything to do with that will have to be offered to tax and be given out. That 85% application or accumulation will apply to that. What are the benefits that you have when you actually receive corpus donations, or why should an organization be raising corpus? One, obviously, because it helps you create a separate fund and prepare for days when your funding situation is going to be really low. People also create corpus funds or sort of specific purpose funds to create scholarships or to create things which are recurring in nature, so that you don't have to keep raising for those things again and again. Because these are excluded from charitable income and application is also not required to be shown, these go a long way in creating a huge pool of money, which will help an organization sustain. Um, yeah. What are the consequences, of so while corpus funds have a bright side to it, there are also some parts of corpus which are sort of something that one has to understand what happens if you lose your 12A exemption. So in cases where you lose the exemption, either by not complying or to the conditions which are laid down, or by any wrongdoings under the section 13 of the Income Tax Act, then the corpus will actually be taxed, and you will have to pay at that time uh, almost 40 to 45% of your corpus as tax. So what are the do's to sort of make sure you are always compliant, and to make sure that there is as little litigation or no litigation when you are talking about corpus? The organization should always ensure that the specific clear directions are ideally in the form of a written letter from the donor stating that the money is towards corpus, and if it's towards a specific purpose, then also stating that purpose along with it. uh, Donations should be appropriately classified and disclosed in the accounts as well as the income tax return to ensure that there is no confusion when you're claiming the exemption. So what you will do is that in cases of unrestricted corpus, you will create one head of accounting ledgers. In case of restricted, you will create that accounting at ledger head. In case of self-created, you will ideally not call them corpus funds. You can call them like a rainy day fund or an emergency fund, which helps you segregate these balances. And even when supposing there is an assessment or a scrutiny, you are very clear as to which balance is what, and you don't have to keep finding paperwork to sort of understand where each one of those is coming from. Yeah, if an organization wants to be able to utilize any of the funds which are received as corpus funds towards the objects, or even towards sort of, when it comes to the sustenance or the survival of the organization, it is advisable that the trust deed authorizes these to be done, or a resolution is passed. Again, using towards the objects or programs is advisable not to do it, but in certain cases when you have to, you should make sure that these provisions are followed, or you have these documentations in order. So let's talk about some of the don'ts that were there. A donation that cannot be regarded as corpus donation if there is no specific written direction, or rather no specific direction, whether verbal or written, from from the donor to be able to use them towards, the said amount was used to meet the operational as well as day-to-day other needs for the purpose of running the organization. In such cases where there is no letter available or received from the donor, uh, what do? You have to obviously mention on your receipts that the money is towards uh, corpus for donations. You have to sort of follow up and ensure that you get letters from the organization, and you have to make sure that these organizations cannot be subsequent letters. They have to be confirming the donations, not being issued subsequently saying, oh, we gave as a general donation, but we are okay with converting them to corpus. Those kind of things are not allowed. The intention of the donor from the start has to be that they are giving towards corpus. So you are ideally should avoid circumstances and situations where you want to change the nature of the donation. One thing that you should definitely stay away from, because it's very litigative, is that you keep boxes in places saying towards corpus donation, and whatever money comes in that, then you put it towards corpus. A lot of reasons why that is not going to work is that the conditions, if you remember what we saw, any anonymous donations, because they will come in the form of a donation box, you will ideally have no record of people and who's given how much, what their addresses or PAN numbers are. Then these donations will automatically not qualify as corpus donations. Let's look at some practical examples of how you can actually raise corpus donations. One obviously being the traditional way, where you approach people and organizations to donate towards corpus, and you ask them for a certain sum, and they give you a written letter or a direction using it. Organizations can now also take advantage of online donations, and sort of have the option of uh, being available online, where when people come to your website, they see the option of donate towards corpus. among other options that exist, and they select that and they give the donation towards that. Obviously, when the receipt goes out to them, it acknowledges and states the fact that the donations towards Corpus. This is highly useful when you want to build a Corpus fund, so people can keep giving smaller amounts, 500, 1000, 250, those kind of smaller sums which people don't actually mind donating towards Corpus, and slowly start building your Corpus and create a rainy day fund for you. Right, now that we've understood all of this, there's one very important part that we should look at, is sort of exit tax. This is not something which a lot of you may be aware of and is a little technical, but nonetheless, it's a little important to cover it at this stage. A lot of us sort of have corpus funds and have created corpus funds, to help us sort of manage the organization and sustain. Uh, Now, exit tax comes into the picture when your 12-way registration is cancelled, or you have modified any of the conditions in your registration, like towards your objects, etc., and not applied for a fresh registration, or you have merged with another entity which does not have the same objects, or you have sort of upon dissolution your assets in the manner which is required to be done. Then in that case, your aggregate fair market value of total assets that you have on that day minus the liabilities that you have to meet, the current liabilities, could be loans, could be statutory dues, could be sundry creditors, etc. When you subtract that from the assets, what is left is ideally all the capital fund, which in the case of charitable organizations is nothing but the corpus and maybe a few other funds. In those cases, all of this, what remains, get taxed at 42% odd figure, and this is for this year. So you have to always ensure that this comes with a great responsibility, and to make sure that because you're not offering it a tax and not going through the route of uh, accumulating it or showing application, uh, this provision has been created to sort of make sure that there's no mischief where you create this corpus, um, sort of accumulate it and then let go of the exemption. A lot of people were using this as a loophole to sort of get away from tax, and which is why this has now been closed. um, I will now this brings us to the end of at least the points that I had to sort of bring to your notice, and I'm sure a lot of you have a lot of questions around corpus. I wanted to keep more time for Q&A, so at this point, if you have questions, please go ahead, and I would love to take as many as I can right now. So if we receive corpus, then while preparing computation of total income under income from other sources, and in expenditure, we have to show corpus amount deduction. Is it mandatory, or directly we will show in the balance sheet? So I think you are talking about two different things. One is the income tax return, and one is your accounting. When it comes to accounting, like we saw, it will never go to income and expenditure account. It will directly just go to your balance sheet as a liability side, which we already discussed when we came to the accounting section of it. When it comes to the part which is about the Income Tax Act, there is a separate section over there for you to report corpus donations, which fall under the definition of 11(1)(d). If you specify that amount that has been received in that year and it matches your books, there ideally should not be any problems with that. I hope that answers that question for you, Ma. The next question is, CSR funds are as per law. Does CSR then be used for corpus? Yes, CSR funds can be donated towards corpus as well, but it's very unlikely, as a lot of organizations who give you CSR money want it to be utilized towards programs and not towards creation of a corpus. But yes, if you do find donors who are willing to give you towards corpus from CSR, you can take them. Interest generated on corpus funds is considered as income for the organization or added to the corpus. Interest generated from corpus is ideally always considered as income and does not get added back to the corpus. Uh, in cases where you want to keep increasing the size of your investment, you can actually add it back to the investment. However, you will have to offer it to tax and sort of show application or accumulate that out of the 15% and then say add it back to the corpus, at least the investment amount, but not to the corpus fund amount. What are the limit as per FCRA Act for corpus? There is no limit. What I was meaning to say was that in terms of the limit on where you can invest them, because FCRA specifically doesn't allow any speculative investments, which rules out any mutual funds or equity investments or anything else that is possible under the 11.5. Then your options are restricted to say a fixed deposit or a post office savings um, that is possible. How can we show application if it itself made corpus from the accumulated 15%? So yes, so what you have to do is, let's say in a given year you have no corpus donations. You have 1 lakh rupees as donations which have come to you, which aren't towards any CSR or any specific activities. These are all general donations. From that, you have a liability to, as per the law, to at least use 85% or more of the donations received. Whatever remains after you or after applying towards your charitable purposes, you can accumulate that towards corpus by not towards corpus but towards like an emergency fund by passing a resolution. In that case, you don't have to this is the case where this is after showing the application, it is moved towards accumulation. In this case, this is what I meant, that it's not taxed, it is out of taxed income, like where you have already sort of shown this as income which has come, where you have accumulated it and then set it aside. I hope this clarifies your doubt. Is there a specific or best suggested percentage budget proportion to corpus fund an organization should raise? Very good question. What I would say here is that this sort of depends on what kind of practices and what kind of programs you are doing. If you are a very field intensive organizations and have budgets which are dynamic and keep changing, it's very difficult to sort of maintain a percentage because you have to constantly keep fundraising for your projects and your proposals which keep expanding and keep changing. If you are an organization with a very limited amount of activity, let's say just to do with scholarships or running one single library or doing something which is very limited, you can actually move towards a larger percentage of corpus, because since your ticket size is going to be remaining fixed for the foreseeable future, you can keep creating a corpus and keep generating more and more income out of that, so that you don't have to depend on regular donations to sustain that activity. So in a few years time, there will come a time where your activities can actually just sustain off the interest or any income that is coming out of the corpus. If we have raised money during any event, it is unrestricted fund, can we consider that as corpus? So Sarika, we covered this by saying that this has to be a voluntary contribution with a specific direction. When this only in cases where money comes with a specific direction and each donor is identifiable with that specific direction, you can take it towards Corpus. From what I understand, when you are raising money in events, it will not be possible for you to get these specific written directions very easily. In that case, you if this falls under the calculation of that maximum 15% can be set aside or accumulated, from that you can take it towards an emergency fund. But you cannot directly create a corpus or move it to corpus and not offer it to tax or not show accumulation or application of this money. You will have to do follow that route. What documentation would we need from donor if unrestricted corpus fund is donated? Chitra, over here, as the law goes, you have to have a specific direction from the donor. This, again, the law unfortunately doesn't provide for how the specific direction has to be shown or documented. What is ideally recommended is that you always have um, a written direction from the person saying that I so and so having pan so and so is would like to donate an amount of XYZ towards the corpus fund of an organization. And then of course them signing it and addressing it to the trustees, etc. That format is something maybe we can send you guys along with the presentation when it goes. I will note that down for myself. Great question, Chitra. Okay. Is there any ROC compliance that we need to fulfill? I don't think there is any ROC compliance that is required to be fulfilled when it comes to corpus alone. But obviously, as all the other Section 8s do, you have to file your annual returns, state all your balances, and state uh, sort of what your liability and assets look like. So obviously over there you have to report corpus funds, but separately as corpus goes, there is no separate form or any other compliance that is required. um, how can we show anonymous donations in the books? I will skip this question as this does not form a part of the corpus that we are discussing. We can take this offline. Hina, you can take my email ID from Vanita and we can sort of discuss this separately. Can surplus be converted to corpus if the donor agrees at the end of the year? Like I said, you should avoid situations or circumstances where you are sort of going back and creating documentation. The intent of the donor to create a corpus or to give as corpus should be from the beginning. So would highly recommend staying away from such practices, because documentation, creating paperwork and justifying it later is always an issue. You can, however, sort of move this money like a self-created corpus that we spoke about, calling it an emergency fund or a rainy day fund that you can then set aside. Please explain the difference between running, admin, survival of an organization and the objectives of the organization for utilizing corporate funds. Both are the same or different. So running expenses, admin and survival, uh, they are somewhat different. So admin expenses are expenses which are necessary for an organization to run even if no programs were running. So the question to ask always is, would you have to pay for this even if you had no programs or are not direct expenses? So let's say you have an office or a head office where the organization is registered or placed. You would have to pay that rent irrespective of whether the programs are running or no. So that is something which can actually be paid for from corpus in times where you have no other funds available. That's what for admin and survival means. Running expenses, I'm not sure how to define this, and I think it's a much broader term. So I will restrict it to say, where admin and survival of the organization is at stake. So if you don't incur that expense, you will stop existing, is what survival of an organization means. Um, and towards an object of the organization means towards fulfilling what you actually want to achieve. So let's say somebody's working towards nutrition, or somebody's working towards education or whatever. You cannot be spending on those activities from Corpus. So self-created corpus can actually be used for creating, so because the nature is such, you can actually use it for anything, but because you have resolutions passed to sort of create this money, you should ideally restrict it to be used only for things which it has been set aside for. So if it's an emergency fund, then for that emergency. If it's towards buying a capital asset, then buying just that capital asset. uh, yes, the same restrictions apply to the unrestricted corpus as well, but it is stricter than self-created corpus, because here you have actually not offered it to tax and keeping it out of tax. So in that case, it is definitely just immovable property, or when the survival of the organization is at stake. When capital assets are purchased during using corpus funds, what would be the treatment for depreciation? As corpus income is not offered to tax, can depreciation be claimed as application of funds? If not, should we account for the two kinds of assets and claim depreciation on one and not for the other? So, Rashi, as I understand, because this asset is being claimed from, or being rather bought from corpus funds, there is no application of income that you can actually claim. So in any case, depreciation will not be claimed as application of income, neither will the purchase of the capital assets in both scenarios. What you are getting yourself confused with is accounting and the tax treatment. So in accounting, yes, you can claim depreciation on the books and show it, but when you're creating your tax accounts or accounts that need to be filed with the income tax, you have to separate these out, and present them differently. However, my understanding currently is that any assets that are being bought are already claimed as application of income, and you cannot be claiming depreciation as application of funds. So in both scenarios, depreciation is actually out of question of creating as application of funds. Yeah, we'll just take two more questions. I think that's all the time that we have for it. How to account for donations received through Paytm or other kind of e-wallet, but not in the bank account of the organization? So this is the same as accounting for, I mean, here also the entries won't change. You will probably just create a control account to make sure that you are accounting for all the donations correctly. Let's say a Paytm wallet control account. You will debit that and credit corpus donations. And when the money is actually received from there, you will debit your bank and you will credit the Paytm wallet account. In this case, mind you, a lot of organizations and a lot of times there is a transaction fee that is incurred. Please make sure that your corpus donation is shown for the whole amount, not net off the fee. So if you have received 1,000 rupees towards corpus from Paytm, please make sure your corpus is shown as 1,000, but the fee that Paytm has charged you will actually be application of income claimed separately. Your corpus cannot be net of the transaction fees that Paytm has charged you. Can an NGO donate to another NGO's corpus? This is actually a very good question and a very complex one. I will try to answer this as simply as I can. So, an organization can donate to the corpus of another organization from its current year's income and from current year's donations, any or from money that has been received in the current. or as a directive from somebody saying this has to be donated to another organizations. When it comes to giving money from your accumulated reserves or from money that has been set apart to be utilized under 11.1 or 11.2, you cannot give this away as corpus. This is a little more complicated. So if you have a situation where you want to do this, it will have to be studied a little further, and I can answer this offline if you need more clarification on that. Can we take 2 more questions? Yeah, okay, let's take 2 more questions, sure. If we have received corpus in FCRA, is there any documentation specifically required? No, is any specific disclosure required on our website like quarterly income? So when you receive corpus through FCRA, it's the same requirement as you would have otherwise for your books to maintain documentation. Even when it comes to specific disclosures, it's the same requirements as you have under FCRA for your quarterly returns. You don't have to specifically state the purpose of why you received that money in your quarterly returns at least. When it comes to your annual returns, yes, you now have to separate each and every purpose that you have received the money for. So in that case, corpus will be a separate line item. The last question, can we receive corpus donations from shareholders, directors, employees of the organization or sister concern? So in this case, yes, you can receive corpus donations from all of these people. There is absolutely no issue. It's like any other donation they would otherwise give. In fact, ideally, money that you begin the organization with is in the form of capital, and this would somewhat be similar to that. Yeah. Thank you.
Participants after this webinar with the presentation and the recording of the webinar as well. Also, please fill out the feedback form. Your feedback helps us improve our webinars and bring the topics that are of best interest to you. If we have missed out any questions during this webinar, please put it down on the feedback form and we'll try to answer those questions in the coming weeks. This is Vanita signing off till our next webinar. See you.